Okay guys, so the market is a little bit erratic, the indices are very volatile, and I see many traders and investors anxious and afraid of what could happen next and how the hell should they proceed in such a hostile environment? Well, we have seen too many bad catalysts going on. We have a war going on, oil prices going up, the Fed and the interest rates, we have inflation rates. It seems the situation couldn't be more terrible. And I have seen people saying even the word recession. Well, in this video, we're going to talk about all of this and much more. We're going to try to understand what this truly means for us, as retail traders, as retail investors. My name is Nathan, and you are watching the Finance Hydra channel. Well, fortunately to you guys, I have some experience dealing with recessions, with very troublesome times. I mean, here, I am Brazilian. I'm used to trade in a stock market that is very sensitive and vulnerable to political scandals, recessions, a very delicate economy, fragile economy. So I think my experience is gonna help you here. Truly, I do believe I can share one thing or two with you guys in this video. So remember to click on the like button to support this channel. If you're new around here, consider subscribing because our content is pretty good and I'm gonna show you why. Well, the most common mistakes that I see around is that people, especially new traders, new investors, they are still learning macroeconomics, the economic side of the market, and they're gonna try to apply this knowledge to their trading style, to their investment style. They are still learning about the Fed, quantitative easing. They have some understanding of how interest rates, the housing market are gonna affect the market as well. So they have this knowledge, and this is great. This is good. However, when you apply this knowledge to the stock market, I'm so sorry, but this is not gonna work. This is not gonna work for a very tiny detail. The stock market, the indices are leading indicators. They are not lagging indicators. They are not coincidental indicators. They are leading indicators. They are not telling us what already happened, like the unemployment rate. This is a lagging indicator. It's telling you the unemployment rate of the past month. It is not a coincidental indicator, like it's not telling us what's going on right now. It is a leading indicator because it is trying to price the future. The stock market knows everything it has to know about the macroeconomic data. It knows everything you know and much more. Believe me, it knows way more than you. So when you try to apply your knowledge to the market, you are already in a very big disadvantage, okay? So this is not gonna work. What's more, the stock market will not only price what's going on right now and what happened, but it's going to try to price the future as well. I mean, we have a very good example with the COVID. Okay, when COVID exploded, the stock market dropped sharply for 3-4 weeks roughly, and it started going up after that. After March 2020, it did nothing but go up. And did the COVID end? Of course not. It is still going on. But the market was already pricing the idea that the COVID was going to end at some point in the future, and this is why it recovered. Many stocks, restaurant stocks, real estate stocks, they all recovered. I am not even talking about the tech stocks. I'm talking about stocks that were still suffering at that time, and their stocks went up even though the COVID was not over yet. So you gotta understand that the market knows every single detail it has to know about the macroeconomic data, and it is always trying to price what's going to happen next. So it is extremely emotional as well. I, personally speaking by myself, I don't believe the markets are efficient at all. I don't believe in the hypothesis of efficient markets, right? I don't believe in this. I believe the markets are extremely emotional, are extremely brutal, erratic, irrational, and it's not gonna make sense most of the time because it is going to try to price not only the future per se, but what people expect of the future. And that's what you gotta understand. Now we see some people talking about recessions. Let's try to understand how the market deals with recession, and keep what I just said in mind, okay? Try to understand that the market is always trying to price the future. Let me share my screen with you for 1 second over here. This is the S&P chart, okay? This is the weekly chart. Here, do you guys remember after COVID exploded, 1, 2, 3, 4 weeks, it dropped sharply, and then it started to recover. We all know this story. We did have a recession over here, okay? We had a recession at that time, but it was a very short recession. Many of you guys didn't even realize that, but it is a kind of recession. Now, if we see a recession again, like for instance, here in Brazil, I have been trading in Brazil for many years right now, and I do have some very nice examples of recessions. For instance, I traded during this recession over here. By the end of 2015, beginning of 2016, Brazil had a very sharp recession. Our president suffered an impeachment. We are facing too many fiscal problems, monetary problems. We are all in a terrible situation. This recession started in the ending of 2015. See, the stock market already priced the recession over here. For years and years, we have been dropping sharply because our economy was not doing well. But when we officially declared a recession, check what happened next. This happened next. This is 2016, the beginning of 2016. The index went up roughly 200% until 2019 over here, even more by the end of 2019. So we had a phenomenal bullish leg. Was the recession over? Of course not. It was not over. We are still in a recession. We are still facing too many problems right now. But see, the market already priced the recession way before it started. And then it recovered nicely. Now with the COVID, we had the exact same thing, but it was a little bit sharper. And in the beginning of 2021, we had another recession, okay? We had a recession. We dropped it for a few weeks, but to me, it was just a pullback to the 21 exponential moving average in the weekly chart, and it started going up again. Of course, it dropped again because it is Brazil, right? Brazil is a very rough country to trade, but still, see how the market does not follow the macroeconomic data. We can see other examples on the S&P as well, but right now you guys gotta understand that the market is not going to behave the way you want. Now, if you ask me how the S&P will behave from now on, we gotta keep our eyes open at the price action, okay? Regardless of how the macroeconomic data is going to play next, we gotta keep our eyes open to what the charts are telling us. For now, right now, we do have a possibility of a head and shoulders short pattern on the S&P. If triggered, and only if triggered, only if we actually lose this black line and close under 41.67, we might take a sharper bearish movement more seriously. Maybe you're gonna drop even below the 4,000 points. I don't know, the 3,000 points, it is another real possibility. So right now, we must wait for the signals. But as long as we don't see any crystal clear bearish confirmation, I don't see any crystal clear to believe that the S&P will actually engage in a bear market right now. If it does, great, amazing. The stocks are gonna get cheaper. Maybe it's gonna be an opportunity to buy. But for now, I am more neutral than anything else. I think we have many opportunities. Many individual stocks are looking great, and it is totally possible to trade during recessions. I am a living proof of that. So, so it is totally possible. But right now we gotta be extremely careful regarding the indices. As long as we don't see crystal clear reversal in the daily chart, I can't say the S&P will be a buy again, but let's keep our eyes open. And if this video helped you guys, remember to click on the like button and to subscribe, my dear friends. I will keep you guys updated on many stocks on the indices every single day in this channel, so consider subscribing. Thank you very much for your support, my friends. Stay safe. Farewell.